Hi, and welcome to the Des Moines Real Estate Show. I'm Jim Hibbs, licensed realtor with Caldwell Banker here in the Des Moines area. Guy Leman's with me today, and Guy, you're with Compass Financial Service, a financial advisor. You know, sometimes we forget as we're looking at that home, it is usually one of our biggest investments, but there's a big picture to be looking at.
There sure is. You know, the first place that we start is a net worth statement.
Yeah.
We like to list all the assets, all the liabilities that couples have or individuals, and just look into it and say, hey, where are your strengths? Where are your weaknesses? And does this net worth picture really allow you to go forward and purchase a home?
Yeah, we're going to talk more about that, get into the top 5 you need to know, because there really is a big picture you should be looking at when purchasing a home, whether that first home or that big home down the road or downsizing. Lots of things to think about. We'll talk here in a moment, Guy, but right now let's take a look at the numbers.
There are 3,529 homes on the market. Brand new listings over the last 7 days. 192, 32 are back on the market. 135 have seen a price decrease, so sellers have decided to lower the price on their home. 17 with price increases. 221 homes, sellers and buyers have reached agreement over the last 7 days, and 137 homes have closed.
So that's a look at the market and look at the numbers. And I tell you, numbers are always important. Families should be looking. I know I personally look at the Hibbs family numbers. Individuals should know where things are at financially, and that's why we've got Guy here to talk about that. But before we get into that in Compass Financial, tell us a little bit about yourself.
Yeah, I'm Guy Leman from Compass Financial in West Des Moines, Iowa. Compass Financial has been around since 1992. And I have been with Compass Financial for 5 years. My family's been long affiliated with Compass Financial, so it was a pretty easy transition for me to choose Compass.
All right, what part of town you call home? And
West Des Moines, live right across from Dowling High School.
all right, you got to watch out for those high school drivers, I suppose. What about 8 o'clock in the morning, 7:50 or
8,
something?
about 3:50, yeah.
All right, you got
Backs up.
That's a whole nother show. Let's talk a little bit about, let's talk about the top 5 things we need to know when we look at our overall financial health. Obviously, a home is a big part, for most people, the largest investment they have. Tell us how all that goes together, Guy.
That's right. So a lot of times we start analysis by doing a net worth picture. And that's listing all your assets on one side of the page and all your liabilities on another, and often comparing them. So for instance, the first line on the asset is a house, right? Your home, if you own one. And then right next to that on the liability side is your mortgage. So if your home is worth $200,000 and you have a $150,000 mortgage, right? When you add those up, that equals you have $50,000 of assets in your home.
Home equity.
Home equity.
You've got your equity in the home there, and that's part of that selling point of a home. You're no longer throwing money to your landlord. You're putting money towards yourself. You're paying down that bank note every month. But that is an important part of it, where you are in balance and keeping that in balance.
It is. So that's half of your picture, is your net worth over time. And we just recommend people do that once a year to keep tabs on things. Okay. The other half of your financial picture is your cash flow. Money coming into your household, money going out of your household. And of course, your housing expenses are a big part of that. Now, there's some broad guidelines that are out there about how much of your income should be going towards household expenses. Right? So 2 numbers I'm going to throw out is 30%. 30% of your gross income should be going towards, I should say a maximum of 30%, should be going towards your housing expenses. That's principal and interest on your mortgage, insurance and taxes that also have to do with the house, plus any maintenance that you would expect, and utilities.
Yeah.
So all those things kind of get wrapped up together, and you need to know your numbers, how much is actually going towards that expense.
Yeah, and that's real important to note. I know there are other folks out there that will say as much as 40%. That's a steep part of your income. And it's also important, too, because I think sometimes buyers become confused. They think that 30% is just that house payment. And really, you've got, your Mid-American bill. It can range anywhere from $100 to a couple $100 a month. You've got insurance, all these other parts that you need to keep in mind when you're deciding what you can afford and when to go forward.
That's right. And another thing to remember is the rent that you're paying right now, if you're renting, is not going to equate equally to a house cost. Okay, because if you have a commercial property owner, they're budgeting 1 to 2% of the building value every year just for maintenance costs. Right. So you're going to have these maintenance costs now that you're responsible for, that you're the owner. So think 1 to 2% of the cost of your house annually in things breaking or saving up to replace a roof at some point. All these big things come into play.
Yeah, the furnace does not decide it needs to be replaced on your timetable.
No, it usually happens in the coldest day of the year.
Right around 0 degrees generally. All right, what's number 3?
Go through the underwriting process for a mortgage. And
before you get to that home, you're saying?
Well, yeah. So this is all in leading up to deciding to purchase a home.
Yep.
So looking at your numbers, trying to figure out if you can make it work. Secondly, go through the process of underwriting, because a pre-approval is much different than actually qualifying for a mortgage.
It is. Number one reason that a home sale falls apart. When you see those homes that have been pending or under sale and then they come back on the market, number one reason is during underwriting something came up and the finances stopped right there.
Well, let me give you an example. So let's say you start in the spring looking for houses and you get pre-approved for a mortgage at a certain level and you make an offer with that pre-approval letter. Mm-hmm. In the meantime, your car breaks down or stops working and you go out and you buy a new car or maybe even a used car, mm-hmm. and you assume some debt to buy that car. All of a sudden now, between your pre-approval letter and the offer, your debt picture looks different, and the bank all of a sudden may not lend you all that you need to purchase that house.
Right.
That may blow up the whole situation and you're back where you began. Well, there's even been situations where they go out and purchase furniture on the eve of buying the house, and that debt throws them out of the situation.
Don't buy, especially once you're locked in. All right, what's number 4?
Yeah, so again, you look to your net worth statement to decide where you're going to get your capital for the down payment, right? Is it something that you've been saving up for a number of years and you have it right there neat and pretty in a bank account? Is it something that you need to sell an asset to raise the capital for this down payment?
Yeah. So those are the things that you need to think about. The bigger financial picture, and the folks at Compass Financial Service can help you with that. Right?
Absolutely.
Yeah.
Another thing that we talk about is we don't consider someone fully retired until they have no debt, which means be thinking out in front of yourselves about how long you want to have this mortgage around. Right? So it can be possible to go into retirement with debt. It just makes things a little less flexible.
I'm sitting here thinking, 51 years old, 30-year mortgage, that doesn't really add up.
Well, so here's another problem. You can't go get a new mortgage, or it's very difficult to get debt when you don't have an active income.
Yeah.
Right? When you leave the workforce, you don't have an active income anymore. Banks are a lot more reluctant to extend credit.
Yeah. I will tell you, though, and I truly believe this, and I'll let you comment on it, Guy, the part of that, the American dream, part of having that financial security, a part of making your way to retirement, a secure retirement, is owning that home. That first home all the way through second, third, whatever your life path is, owning that home, it's generally one of the biggest assets we have. It's not liquid, mm-hmm. but it's a big asset. And the younger that you are when you get started and you buy that first home, you're paying yourself every month.
Absolutely. We can make a great case for the long-term wealth building ability of owning a home.
All right, Guy. Very much appreciate it. Website's right here on the screen. Compass Financial Services. Guy's there. You know Jason Parkin?
Yeah.
I think we're going to have him on in a show, too. And I've known that guy a long time, so I appreciate you working with him today. But
it's my pleasure.
Compass Financial Services, Guy Leman. Reach out to him. He can help you with that overall picture. For now, I'm Jim Hibbs. Get out there and make the most of the day.